Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. I'm Rapstein, and here I am, and I am late. I think this is the latest I've ever done a show, and it's around 5:20 in the afternoon Central Daylight Time on Thursday, July 7th. Thank you for attending. We had our live webinar today. I'm buried out in my office. We've got a lot of staff that's obviously starting to take their summer vacations. I'll be taking one late next week, not the early part. In the latter part, I'll be gone for a few days myself. Why not? Summertime, that's what you want to do. When I'm going to be gone, I'm still going to be putting out, though, my twice daily recommendations. You know, a computer's a computer. I can work from anywhere. It'd be hard for me to do these webinars, however, because I'll be out of my studio. There's even a way to do that from time to time, and I'm debating about it. But, you know, I need a vacation. I need a break every now and then. Let's talk about today, because today was an important day. Today was a currency move day that impacted a lot of things. The European Central Bank came out today and said that even though Portugal's debt status is being rated by some of the rating agencies as junk, they will accept and continue to accept as collateral Portugal's debt. This is a slap in the face to Germany and France, who want to restructure now in order to give another tranche of money to Greece by doing a restructuring of the Greece debt. Why? The ECB has been beyond consistent that they do not want to see a default of any type. They don't care what they call it. Not paying those debts, restructuring bonds or notes that were already issued is off the table as far as they're concerned. To prove their point, they're taking junk status from Portugal, rated bonds or notes, and they're saying that is still collateral, and they're saying that about Greece. That's the message. So that now throws the ball back into the plan that France came up with, that Germany's trying to go with. Will that all happen? Why is that friendly, the euro? Well, you can see there's moves taking place, regardless of what they are, to keep kicking that can down the road. That's the whole idea. Keep kicking it, and eventually time takes care of itself if the austerity measures are in place and there's an oversight and they can get things done. Whether you agree with it or not, that's what seems to be going on. And as that's going on, that put a little pressure on the dollar. Gold got a bit of a bid out of that, and the silver market's starting to stick its neck up even a little bit more. Now, tonight it's down 7 cents, but so what? As I've shown you with what we call the swing line study, remember, this is just a bar chart. Each bar represents a day of trading. We're already after 5 o'clock, as you can see, and here we are with the early evening trade. I put on my swing line study. The swing line study is interesting in the sense that what it does is it shows you previous highs and lows a very certain way. And this is part of the indicators that we build into our charting software, so you can use this. The key number is not to get back under 33.47. That's the key. That's the most recent low in the market. The pattern is higher high and higher low. This was a lower low back there. The support in the market I will call the 18-day average of closes, and that comes in at the 35.33 level. Now, the interesting part is I want you to pay attention on how this market at the end of April, in just a matter of days, fell down, made a low, and we have traded within those bands, so to speak, for most of May, certainly all of June, and so far in July. Silver starts entering in this time zone a seasonal uptrend. Now, the first leg of it isn't that strong, but it's out of the seasonal downtrends next week. I like that. I don't want to see 33.47 taken out. Support in the market is going to come in, as you can see, what's called a convergence. You're getting this 18-day average and the 45 close together. Yes, if the market fell under 33.47, the argument would be all of these moving averages would be above the market. So that's what you have to deal with. And from here, that's not a little bit of money. That's, to be honest, you're $3 away. why should the market go down there becomes the question. And I don't think it should. If we've got a stock market that's on fire, if we've got a lower dollar, if we get any surprises in employment at the end of the summer going into the fall that look better, well, I'm going to think that there'll be a demand for commodities. And silver, any way you want to cut it, is a commodity. It's not got the role of gold. Don't think it does. It doesn't. The resistance I'm seeing, same as yesterday. The Bollinger top at 37 and a quarter. You couldn't get there. And the theory is the market will trade within Bollinger bands 95% of the time. And I'll step back here. You tell me what you see. If you don't think just what you see there is in that range, well, get out your mask, open up a chart. If you want, take a look. That's the theory. And this mathematical algorithm fits that theory very nicely. In terms of momentum, I am concerned. We're now overbought. You can see the red lines into the 80 area, and when the market gets either under 20 or actually under 30 and over 70, you enter overbought zones or oversold zones. And as you did it down here, you bounced a little. Maybe we're ready for a bit of a correction. That's my point, but I don't think we're ready for a trend change at this point. And to that end, I wrote my gold report today. In fact, I published it on my website all of 10 minutes ago. I'll be sending it out in the next half hour to the people that we think should get a copy of it. Certainly all of our customers do, our subscribers to our information do. And I am bullish in this report. I give you all the reasons that I'm bullish, and now I'm getting ready for action. Now, whether right or wrong, and whether there's fills that come out and trade recommendations, I can't tell you because I haven't put one out yet. But I am getting ready, and I will stay it just like that. I think the market's reaching some very, very interesting points. How do you get a copy of this? Well, you call us just at 1-866-973-2077. Even if it's the evening, my staff, I promise you, will get back to you. Or you can go to our website and sign up for our kit. But even when you get the trading kit, doesn't mean you automatically get this. It is free, but my staff generally wants to talk to you. That's all there is. All right, let's go to the gold and take a look at the chart. The chart just left its bear pattern. And when I say just left, I say just left. The market had lower highs, lower lows. 4 days ago, it hits the Bollinger Band bottom again after a brief rally, and it comes out of the oversold condition and is pushed up. My expectation is that you'll probably pull into this 15-20 level and try to base out there. What do I want to see out of the chart? I want to see a drop in prices where you don't take out 1478.30 and then you start up again. That would give me the pattern of the higher highs and eventually the higher low. First target, back to the resistance for me in the 1558 zone. And if I'm right, and this all turns out to be a base area, and this is the key, am I right here? And we start moving into August, September time frame, and this is only the beginning of July, within this base, and you break out the top, I'm looking for then new highs before year end. Could be a nice move. Don't know. Everything in trading is, based on probabilities. This is very important to study. This was how copper broke out. And if you'll recall, copper broke out to the upside in the midst of belt tightening in China, supposed they weren't going to buy and restock, the debt problems that were going on both in the U.S. and the sovereign debt issues that are taking place in Europe. If anything, the odds were stacked against copper. Yet the chart pattern was one, and this is so important to see, of a stochastic that, think of silver, looked just like this, the Bollinger Bands. The stochastic started turning up, and that's where you're at right now. And then the market started launching itself, even overbought. It started over this Bollinger top and just pushed it way out, and now it can afford to get some rolling back and run against it. You're also getting an embedded stochastic. So, is there any sell signal on this chart? None. Support's pretty good here in the 420 zone that I can see. You'd pull back, if you could do that, into the top area of this sideways action. But this is not telling me that we have a weak world economy. Then I look at crude oil. Okay, so we released 60 million barrels. So what? It had no impact. You dropped the market for about a week. And now you're back up and well over the zone, the price, when they did the ADR release and the price point at which Saudi Arabia said it was increasing production by 10 million barrels, a month, something in that area. I think 300,000 a day, 285,000. The market doesn't care. And the market is overbought. It doesn't have a chart pattern like copper to work from. So I think the $100 level probably will offer some resistance in the market. But resistance is not being bearish. Resistance is a point where I think that could stop, and I'm beginning to consider this $95 level as the all-important number where the market's going to find on support. Will undercover that it's got the support there, and you may not get back under 93.45 for a while. What's going to make that happen? If the numbers start getting better, and this is our soft patch, what happens when we come out of a soft patch? So that's got me thinking about those prices. But again, remember the gold report. If you'd like a free copy of this, and they are free, call our staff, 1-866-973-2077. Subscribers to my research, you already know you get it right away. It'll be sent out in the next few minutes, and I'm getting on to 5:30. It'll be out in the next few minutes to everybody. Have yourself a great day. Thanks for watching.